Good evening, I'm Slade Smith, and this is your daily from Sound Money Digest, where smart money never sleeps. From Wall Street whispers to crypto convulsions, we break down the moves of the markets and the motives behind them. No fluff, just facts that matter. Let's get into it. Wall Street rallied to start the week, with all major indexes closing strong on hopes that President Trump's upcoming tariffs will be more targeted than feared. The Dow jumped over 470 points, the S&P 500 climbed 1.5%, and the Nasdaq soared 2%, fueled by gains in tech names like Tesla and Nvidia. Better than expected services PMI data and signs of a softer stance from the Fed added fuel to the move, helping the S&P 500 snap a 4-week losing streak. Investors are now eyeing Friday's PCE inflation report, the Fed's preferred gauge, to see if this rally has staying power. Let's talk crypto, and not just the coins, but the architecture quietly being built behind the scenes. As of today, Bitcoin is pushing $88,000, marking another strong breakout since Friday's $84,000 level. Ethereum is holding near $2,090, up from $1,960. XRP is sitting around $2.47, while Solana is flying high at $142, up nearly 8%. Even Dogecoin is clocking in at 0.18, a 6% gain. The markets are moving, but so is the infrastructure underneath them. Here's what the headlines won't say. There's a growing connection between XRP, ONDO Finance, US Treasuries, BlackRock, and the BlackRock Fund. And it's not a theory, it's fact. ONDO Finance is now offering tokenized US Treasuries on the XRP ledger. These assets are backed by BlackRock's BUIDL fund, one of the first fully on-chain money market products. Investors can mint and redeem these positions using Ripple's stablecoin, RLUSD. This isn't just a use case, it's a signal. XRP Ledger is becoming a legitimate layer for real-world assets, government debt, stablecoins, and soon, possibly more. Meanwhile, Propi continues pushing forward with tokenized real estate, putting smart contracts into housing, while the rest of the world is still stuck on paper deeds. This isn't just a market rally, it's the quiet onboarding of institutions, tokenizing treasuries, digitizing real estate, and connecting the dots under a system you weren't supposed to notice. So don't just watch the charts, watch the rails. Because crypto isn't just money anymore, it's the new backbone of global finance. Gold just reminded the markets who the real heavyweight champ is. It clocked in its third straight weekly gain, up 0.46%, and punched through a fresh all-time high of $3,065 an ounce. While the S&P 500 stumbles, gold's sitting up over 14% year-to-date. That's not just a hedge, that's a statement. Catalyst Metals cashed in on this momentum, selling off its Henty gold mine in Tasmania for $30 million in cash and shares. The buyer? Junior player Kaiser Reef, who just landed a premium deal, a board seat, and a long-term gold pipeline. That's a power move in the junior mining space. Meanwhile, the big boys, Bank of America, Citigroup, and Macquarie Group, aren't shy about their bullish outlook. With central banks stacking gold and China's appetite growing, the smart money is doubling down on stability. Since 2022, gold has nearly doubled in price. You don't see that in many other corners of the market. But it's not all shine this week. Platinum took a 3.39% dip, dragged by ETF sell-offs dumping over 11,000 ounces in a single day. And Galliano Gold came in light on Q4 earnings, missing estimates and posting higher than expected production costs. Add in resistance to Equinox Gold's $1.8 billion takeover bid from Calibra's top shareholder, and you've got a little turbulence in bullion land. Still, there's opportunity ahead. UBS just raised its gold forecast to $3,200 per ounce, signaling even more upside over the next year. And while gold miners are still lagging the metal by over 25% from their 2010 peak, that gap might close fast if gold holds the line above $3,000. Translation? Margins could explode. Threats? Yeah, They're real. India's sovereign gold bond program is now a $13 billion problem as the government struggles to pay out on soaring gold prices. Meanwhile, silver and platinum open interest continues to slide, and China's starting to cool the gold fever, warning retail investors to keep their heads. Bottom line, gold's not just glitter, it's power, it's policy, and it's positioning. And right now, it's holding the crown. The financial reset has already begun. A global financial reset isn't coming, it's already here, and we're well into the early phases. First, de-dollarization is no longer a theory, it's a movement. The BRICS nations, China, Russia, Brazil, Iran, and others, are ditching the US dollar in favor of local currencies and gold. Even parts of Africa and Latin America are trading without touching the greenback. That's a seismic shift. The US dollar's global reserve status has been the bedrock of American financial dominance for over 80 years, and that foundation is now cracking. Second, central bank digital currencies, or CBDCs, are being developed at warp speed. Over 100 countries are actively testing or building them. But don't be fooled, this isn't just a technological upgrade. CBDCs give governments programmable control over money, meaning they can track, restrict, or even expire your currency. This isn't just a monetary reset, it's a control reset. Third, the global debt machine is reaching its breaking point. The US national debt just passed $34 trillion. Japan, China, and the Eurozone are in deep too. Now the IMF, the World Bank, and the BIS are floating the idea of debt restructuring. Translation? They're preparing for default scenarios, but dressing it up in policy speak. Fourth, central banks are hoarding gold like it's 1971. China and Russia lead the charge, but they're not alone. Why? Because they see what's coming. Gold may be used to back new digital currencies or simply to hedge against the collapse of fiat trust. Either way, it signals preparation for a monetary overhaul. Fifth, the elites are repositioning quietly, but deliberately. Insider selling among CEOs is at multi-year highs. Wealthy institutions are moving into hard assets: land, commodities, crypto, and gold. These aren't panic moves. These are pre-collapse hedges. And finally, crypto is not being ignored. It's being absorbed. Bitcoin ETFs were just the beginning. Wall Street is now tokenizing real-world assets, everything from real estate to treasuries, onto blockchain infrastructure. This is how they'll bridge the old system into the new one, under their control. Here's the bottom line. The reset is not some future event. It's a staged rollout. We're in phase 1, strategic exits from fiat and institutional accumulation. Phase 2 brings CBDCs and surveillance tech into the mainstream. Phase 3, a trigger event, war, debt collapse, or economic shock. And Phase 4, the new financial order, packaged as innovation, sold as stability.